Hello Sky Traders, welcome back to a new video. It's been a while now, and now there's a lot of hot topics, especially after the Ethereum merge. So guess what? Today we're gonna discuss the Ethereum and do a recap, or weekly recap on the Ethereum USD. So without further ado, let's get started. As we usually do, we do a top-down analysis. So we're gonna start with the daily time frame, understand it, and then navigate and drill down to the lower time frames until we reach the 15 minutes and 1 hour time frame, so that we can find the best opportunity and how we can analyze the entry and exit of the trades. So on the daily chart, as you may know, that currently we're trading with this range, right? Between 1999.97 and 1437.4. It's a consolidation area, and as you know, whenever there's a consolidation, market is trying to collect orders in both directions, right? So we can see a sell side liquidity and buy side liquidity just exactly at this candlestick, where we broke this market structure again with high pressure sell candle, sell side liquidity during this consolidation area, trying to reach the bottom of this consolidation, because we have here buy side liquidity of this high pressure buy candle, broke this market structure. So now a lot of buy orders were placed exactly at this area, and a lot of sell orders were placed at this area, right? We created an order block after we broke this market structure. Let's zoom in. After we broke this market structure by this high pressure sell candle, with a huge sell order flow, sell side liquidity, we try to trade back to this previous, you can call it resistance level, you can call it sell side liquidity, you can call it liquidity void. It doesn't depend, as long as you understand the concept, right? So we tried to trade back, the market rejected, and we created an order block with a high pressure sell candle breaking this market structure, and another high pressure sell candle breaking this market structure and trapping those buy orders or buyers in the market, right? So this is a break of structure, or we call it BOS. And now we're trading on this critical area, which we have again high pressure buy candle. So it's a market structure, or you can call it a support level, or you can call it a liquidity void or liquidity pool, whatever the naming convention is. You have like to understand like the price action, or what are the areas that the price is trying to approach. So let's on the daily time frame, we are trading within this range. So either we're gonna complete to the bottom of this range, of this trading range, and by this we're gonna break this consolidation, and whenever we have to break a consolidation, we have to break it with a high pressure sell candle, or this is gonna be the end of the consolidation area. So we're gonna reverse from this buy side liquidity, or create an order block. And in order to validate this order block, we have to break this market structure created by this high pressure sell candle, right? So we need to have like a high pressure buy candle breaking this market structure and trying to trade back, and then you can place the buy orders. Remember also that we have like three important and critical price levels here, right? Because again, price was rejected at this level, exactly at 875.67, and at exactly $1,000, and at $1,021. So price rejected 3 times from these levels. So it's considered really important levels of liquidity as well. A lot of buy orders were placed. If we consider the average true range, and as you may know, this is the only indicator I use, it just gives me visibility on what's the volatility of the market right now. What should I expect in the upcoming days? A high volatile market or a consolidation? Because, for example, now we can see that the volatility or the trading range of every single day during the past 14 days, because now I adjusted the average true range to period of 14 days, right? Since we are on a daily time frame. You can see that we are nearly at the bottom of the average true range, right? So that does mean that we can expect a pump or huge volatility in the upcoming days. So if we have, and if you're waiting for a break of market structure to this downside, So it's going to happen because we can expect high volatility in the market. Or if we expect like a rejection, it's also going to happen. So it just gives you an indication that, okay, in both cases, you're waiting for a high pressure sell candle and high pressure buy candle. And this is also confirmed by the average true range, right? So let's drill down to the 4 hours time frame. And let's adjust the chart. Okay, as you see, this is the trading range. Now we are at the bottom of the trading range, completing this trend line and following this trend line, by the way. This is the first touch, second touch, third touch from retail point of view. And from market makers' point of view, we're continuously breaking the market structure with high pressure sell candle. And this was a critical day because this, when the merge happened, so we expected a high pressure sell candle or a shift in the market, breaking the market structure, because a lot of Ethereum inflows to exchanges happened during this day, right? And we have detailed analysis about the Ethereum merge in a completely new video. So a lot of buy orders were placed here, took out the market because of this high pressure sell candle. Again, now we're trading in a critical area where we have a liquidity void or buy side liquidity, which was broken before by this high pressure buy candle. Now we're trading this range. We're slightly consolidating, trying to collect some orders in both direction. So if we expect, or if we see in the upcoming hours or days, break of this market structure with a high pressure buy candle, break of this trend line, so we can expect a reversal, right, to the top, or at least to this liquidity void area where a lot of sell orders were placed during the merge time, right? So this is going to be our next target. On the other hand, if we see a high pressure sell candle breaking this market structure, we can expect to reach out to the next liquidity pool area, which we had at this price level, right, on the daily time frame. We've also been creating an order blocks. Market is trying to trade back to the liquidity void area, and I mean by liquidity void area the areas that have never been touched before. Rejection, high pressure sell candle, breaking market structure, trying to trade back to this. We can call it resistance level. We can call it market structure that has been broken before. We can call it liquidity void area, whatever you can call it. A lot of buyers were trapped breaking this market structure or breaking the support level with a high pressure sell candle. And again, why I continuously say the high pressure buy candle and high pressure sell candle, and it's important because whenever you have an important level, whether resistance level, support level, market structure, whatever, I'm not gonna be convinced until this level is broken by a high pressure sell candle, because a high pressure sell candle or high pressure buy candle means that a lot of orders are taken out of the market and a lot of buyers or sellers are trapped. So this means a shift in the market trend or in the order flow. That's why I keep saying, or I keep highlighting the high pressure buy candle and high pressure sell candles and how they convince, or they should convince, your trading decisions. On the 1 hour time frame, I divided the past week. So again, we're in a downtrend, starting the days by manipulation, and this happens usually New York, London session, and then distribution, and then if it's a sell day, so usually the manipulation is going to happen in the buy direction, and if it's a buy day, usually the manipulation is going to happen in the sell direction. So it was a sell day. We tried to take out all of these orders, creating order block, trading back to this level, and then to the downside. Consolidation, trying to trade back to the previous level of Monday or the previous day, creating auto block and breaking the market structure with high pressure sell candle during London session, and slightly consolidation by the end of the day. Next day, trying to trade back to this important or previous level, order block, and then we broke this market structure in the next day. Consolidation, trying to trade back, creating order block during London session, breaking the market structure during New York session, and especially this happened when the merge happened. Consolidation, trying to trade back, breaking market structure, and so on and so forth. So if we're going to continue in the sell model or follow this trend line to the downside, we can expect like consolidation, maybe tomorrow, maybe today, and breaking this market structure with a high pressure sell candle. But this could be a manipulation to collect all of the orders at the bottom of this consolidation levels, right? On the daily time frame, we mentioned that this is a consolidation area, right? So we can trade way down to this level to collect all of the orders at the bottom of this consolidation area and then trade back up once more time. And again, we mentioned that this is a buy side liquidity. So we can expect a rejection from this level because again, this is a high pressure buy candle. That does mean that a lot of orders were placed from market makers' point of view. From retail traders' point of view, it's considered a strong support level. So what could happen is manipulation to the downside, convincing traders that, okay, we're going to go way down below, but we need to be careful because this is an important level again on the daily time frame and the 4-hour time frame. So we can expect a rejection from this level. Even if we're going to continue to the downside, we can expect a rejection from this level. So how this could look like in the upcoming week or weeks. If this is the end of the trading range, and if we see a high pressure buy candle breaking this market structure, we can expect trading back at least to this level. So let's draw it. In case of a buy model, what we can expect is consolidation and manipulation to the downside, taking all of this liquidity, and then breaking of market structure, this market structure, trying to trade back, and then approaching this level. Again, this is an important level, so we can expect a rejection. But if we're going to continue to the upside of the consolidation area, we can see slightly consolidation, and then break of this market structure, trying to trade back to this important level, and break of this market structure, trying to trade back to this important level, and breaking of this market structure, and trying to trade back to this level to approach like the top of the channel. And we can leave actually the consolidation area because we're going to have the sufficient liquidity or buy orders that can drive the market upside and leave the consolidation area. This manipulation could happen with a few pips or hundreds of pips. Because again, this on the daily time frame, this is the buy side liquidity. So we can even trade way down to this level to collect some orders in order to shoot one more time to the upside. All right. But this is an important level because we usually don't place orders when we reach this level. We just wait to see, to have the confirmation that price rejected, broke the market structure, or created an order block. But what happens if we broke this market structure and tried to trade back and then broke the market structure? So that means that we are heading to approach this level, and this level. So there are two models actually. If it's a buy model, we can expect to see a manipulation to the downside, create an order block at this buy side liquidity, and then breaking of market structure to the upside. If it's a sell model, we can expect a price to leave this consolidation area with a high pressure sell candle, breaking this market structure, and breaking this market structure, trying to trade back, and then approaching these levels of liquidity. Is it going to happen soon? Yes, because on the average true range, we can expect that we can see a pump in the volatility or the volume in the upcoming days. Not only on Ethereum, but also like on Bitcoin dollar. And as I usually say, whatever we are expecting, wherever we are anticipating, it's most likely going to happen during London session or New York session or any important news release or circumstances, releases related to crypto. Anything that's related to US dollar as well, because they are directly connected to the US dollar, this pair, and the Bitcoin dollar as well. We don't trade what we want to see. We trade what we actually see. So we wait. Now we have the formulation of both models actually. We do have now a vision of the buy model and a vision of the sell model. So we're just waiting what's going to happen. Again, it also depends on your time frame that you're trading on. If you're trading on a 4 hours time frame, on a daily chart, if you're a daily day trader or position trader or swing trader, you can wait till this happen. But for example, if you trade on the 1 minute chart or 5 minutes chart, you can find a lot of opportunities along the day. Even it's a buy day, you can find a lot of sell orders or sell positions, or if it's a sell day, you can find a lot of buy positions and vice versa. However, I usually recommend that you trade with the direction of the market, because even if you are wrong, you still have more chances to succeed or to win the trade if you're trading with the market. For example, if it's a buy day and you're looking for sell orders on the 1 minute time frame, you can find a lot of positions, a lot of opportunities, they can work, but most likely it's gonna succeed or the trade, or it's gonna win if you're trading with the market. If it's a sell day, just try the best positions for sell, or if it's a buy day, try to find the best positions or entries for buy orders. As I usually say, trade safe, wait for the market, be patient, trade what you see, not what you want to see. Thank you so much guys for watching, and see you in the upcoming videos.